Cool, right, we should be live. Live and direct. Load it up. And delete that one. Cool. Live trade in London. Let's get the link. Yes, Goran. How we doing, my man? Where are you based, mate? You're in Bali. I know you're even ahead of me. I think Bali's 1 hour ahead of me. Well, I know it is. But yeah, I think that's where you are, right, in Bali? Post there. Cool, that's Telegram posted. Yeah, I live in Bali, from Netherlands originally. Which part of Bali are you in, mate? You're in Canggu? That's where the whole digital nomad life is, in it, in Canggu. I was in Bali for about 3 months recently. Did some time in Canggu and then I went up to Ubud to see Ubud as well. But it's really good Bali. The weather's sort of on and off, isn't it? That's why I left, because it started getting wet. But really good place, really busy, really good for networking. Good lifestyle. Thailand, I'm in Phuket. I was in Canggu for months, but it's too crowded. Yeah, trust me, it is. It is. It's really busy, isn't it? Especially the roads just aren't built for it at all. Like, they're just single lane roads. And everyone's crammed on a fucking motorbike. God forbid someone has a car in the middle of it all. It's a nightmare, innit? It can be waiting ages. Big traffic jams. Morning, Lewis. I hope you're well. Both Lewises. 2 Lewises inside. Lewis T, Lewis B. Candidasa, live in the east. Oh, it should be a bit more quieter for you then, compared to Canggu. Right, let's get this out on some more platforms. Let's get this link. Before I do that, let me see if there's anything pressing on the charts. I don't think there would be, but maybe there is. We've got a nice direction today. I've not confirmed it, but I suspect we're going to refill this gap. That's what usually happens. So let's see. GU's looking good. First site. Yeah, I'll do my markups first. I've shouted them out in the telegrams. Anyone coming from social media is just gonna have to wait a bit. Prioritize the telegram community. Alright, so firstly we mark up our Asian range. See what happened here. We didn't sweep the low, but we're breaking the highs now. That's cool. Check it on EU. Yeah, didn't sweep the low either. We're still inside this range for now. This one's been swept. Move this text out of the way. So instantly, what we can see is price was using the EMA as resistance, broke above, now using it as support again. Okay, so that's a great sign. That's what we want. Let's check some different time frames here. Yeah, the 5 minutes using it nicely. That's what we love to see. If we're looking on a higher time frame, we swept this liquidity from this low. That pushed price up, brought a lot of flow back in the market. It acted like it was going to break out of this local trend, like that, and now it's falling back and it's fell back beneath inside this trend. Okay, so if we look on the 4 hour, it's a huge gap today. Very rare that you get a gap of that size. But yeah, price acted like it was going to break out, and this is why we wait for a substructure to break out. So this is a perfect instance of substructure where prices broke out of the channel, but now it's back in. So this is just a fake out, so a fake breakout. Okay, when price is acting like it's breaking out of a trend, but it's actually just coming back in the trend. So that's why we always wait for that substructure and then the break of that in order to look for longs, and likewise on the vice versa. So now what we're looking for on a higher time frame is we had this trend, okay, marked by these two lows, which broke beneath, again formed substructure, and now this is broke beneath again. So on a day trading / swings trading perspective, we are looking for something like this to continue, which is aided by this gap, which should be filled in usually for proper order flow. Look at the gaps, by the way, similar to how you'd see a fair value gap. Okay, it's basically an even more overpowered fair value gap, because not only did it not recover that price, it completely skipped over the price altogether. So yeah, this gap should get filled, pushing price higher. That should be a draw on liquidity today. So we will be mainly looking for GU longs today, I imagine, and we've got a nice trading range to recover. So if I mark this up on our intraday, this high to this low, up to this 61.8 level, that can be a pretty plausible trading range for the day. And we also have this fair value gap as well. which is another draw on liquidity. So yeah, very clean run for us today. If we look for a suitable entry, what I'm seeing already is this support, this low to this high, look for this area, and look to take a long. Now, because we do have that clean run, you could extend this. So this is currently a 3.4 lined up. You could add a TP3 like all the way up here if you wanted to. That's going to be close to a 7-hour trade. For now, I'll just mark it like this and see how we get on. EU. Doesn't look as good. Like its ugly sister. So yeah, looking on GU. Here was our EURUSD trade. I imagine everyone in here saw it, but yeah, pretty spectacular play from us there. I said this was our upper trading range, and you can see that's where prices just wicked up and completely reversed back down again from that point. So called that one pretty end to end so far. Caught a short, reversed, caught a long, said where it would reverse, came back down. Playing ping pong with the dollar. Now, if we keep analysing this, this would be our third break of structure. After that point, we want to see an ABC correction lower before we start trading, and we've fulfilled that upper trading range. So we're not looking to stack on this. We want to wait for that to correct. Euro, same story as the pound. Aussie dollar, same story as both of those. New Zealand dollar doesn't look as good as the other two. But it will probably still do the same thing. Again, did the same as everything, where it acted like it was going to break out higher, then we traded it lower. I can clean this up a little bit. Yeah, clean some of this up now. Move. And now this is our most relevant break of structure. See, this is why I like trading breakouts, because you saw all of that structure that I've just deleted, okay? Structure is only temporary. People, when they're trading supply and demand and they're trading trend lines and trading this and trading that, like, they have this fallacy that, oh my god, there's two lines that connect, so therefore when the third time it hits, it has to bounce off. It doesn't. Structure is kind of made to be broken in the market. So when you're trading breaks of structure, you've always got setups pending, and you're not sort of expecting price to just magically bounce off of a line. You're kind of waiting for it to not happen and then play off that move. So I like trading breakouts. And usually a breakout, by definition, becomes the start of a trend. And the way you profit the most off of trends is by getting in at the start. Now, if this is our break of structure here, what we ideally want to see is some form of ABC upwards. This will give us a substructure. And then it's the break of this that will trade lower. I can get green flagged again. Keep an eye on GU. Alright, let's call this bitch out to socials. Let me get a nice shot of this. Who we got inside then? Got Rio, morning CM. Excited for another profitable week. Yeah, we hope so. We've had what 5 in a row now. When the market gaps, are there any precautions you take? No, we love a gap in the market. If you just rewind it back a bit, it's basically a fair value gap, but even better because not only did price not recover an area, so it's inefficient, it completely skipped it out altogether. So it's like a fair value gap on steroids, and you can look for them to be filled in. So it gives us an area of a draw on price. Right, let me make this look more presentable. I need a fucking coaster. Right, just give me a sec posting this out on the old socials. Post. Post. I need to check up the T's and C's of Snapchat. I've been putting some bits on my Snapchat and got a fucking warning. Don't know what that's for. But same as TikTok. Got a warning off TikTok, didn't I, for going live on there. But I've not gone live on Snapchat. I've just been putting like my trades on. Right. What we're saying. Can a break of structure be played off of? Can a break of structure be played off a trend line and market structure horizontally? Yeah. Yeah, mate. Can do. Now there's two possible ways that you've asked that question. One of which is if the trend line is horizontal, which, yeah, that basically just becomes a channel, or like a double top or like a triple top, something like that. Yeah, absolutely fine. That's a valid break of structure. The second way that you could have asked that question was if the break of structure is horizontal, which we commonly see. Like this is our structure level there, and that breaks out higher. I'm pretty sure you probably meant the first version of that, but yes to both of them, so easy answer. Now we've got a decent amount of fair value in this retracement, so it should be a good move. Could look for something like this today. Big boy. I don't know if this will actually come back to the 71, to be honest with you, because of how bullish this is. So we could just look for an overall bigger move like this. I don't usually like doing the whole stops beneath here. Let's add. How's it look if we had a couple pips on? Nah, not enough. 3 pips. Still a bit tight. Don't need to be that greedy. How greedy? Make it a 15 pip stop. Something like that could work. TP1. TP2. And then leave a runner for the gap fill. Something like that. Obviously we wait for rejections first. Let's load this up, Kerr. Just got 1% left to make on this challenge, and then we're past on the pound and the 5 minute. Let's price this up. 15 pips. Spread is 4 ticks, I just saw there. So 15.4 pips. I think I'm only actually going to put half risk on this one because it's like the last trade on my challenge. So even if it wins, I don't need to even make that much. Would I categorise a change of character as a break of structure? Yes, a change of character is a break of structure, but for my strategy, I wouldn't trade off of a change of character. I'd want to see a change of character and then another break of structure afterwards to confirm it, so that it's not a fake breakout. Right, I need 6.4 lots. So yeah, this isn't a limit order. We want to wait for some confirmation first, and then we take it. And depending on where the confirmation comes from, we might adjust our entry as well. Why don't you use the position size thing for MetaTrader? If you mean to calculate lot sizes, I'll do it on my phone. There's an app called FX calculators that I recommend. Pretty simple. Choose the pair, put your balance, put your risk percentage, put the amount of pips. Tells you how many lots you need. It's just muscle memory now. Takes a bit getting used to when you're a beginner, but it is literally just like typing things out that you see on your screen. I usually execute everything on my phone and then mark it up on TradingView, but I kind of like the desktop now, to be honest, for executing. It's a lot cleaner, especially when you're placing multiple trades, and you can do the whole double tap on it, duplicate the trade, and then change the levels. You can't, like, there's a lot more that you can do on desktop than you can on the phone. I literally only started using desktop so I could show you guys that I'm actually entering on live. I didn't use it before then, apart from algos and stuff like that. You have to run them on desktop. But yeah, really like executing on desktop now. Let me add my 50 level on just so I can see where it's reacting. No rejections yet, no entry yet. Simple rule. Stinu for the win. What's Stinu, bro? STINU. So yeah, we're not in this yet. It's not a trade yet, waiting for confirmation. Let me write that because I know a lot of people always get confused after they join and see this. So I'll write waiting for confirmations before entry. Say it louder for them at the back. An app for lot size calculations. Oh, is it? Is it? Okay, I use, it's literally called FX Calculators, the one that I use. Does what you need to. C-Trader has it all built in, nice. That's cool. Yeah, if there's one on MetaTrader, I might look to switch, but you know what it's like when you've got something that works and it's really not a pain at all, I just use this. and I kind of like having things separated. For example, if you're doing your analysis on TradingView, I know there's the function that you can link up your trading account to TradingView and directly execute from here. But I kind of like the idea of it being separate. You know, the idea of you misclicking something on your TradingView while you're charting up and it fucking puts a 10 lot trade on, things can go wrong. So sometimes having things on different apps, like you might think as a beginner, oh, it's a bit of a faff having this there and this there, but it kind of adds that level of safety in. This is currently a 15 pip stop, Rio. Jordan James having a bit of C-Trader, MetaTrader beef in the comments. Yeah, we're not entering yet. No rejections yet. If we get the rejection off the 61.8, we can lower that entry and get a deeper entry. So we're just waiting to see where the rejection actually comes from. Thinking about it, but not got it just yet. Doesn't look like it's rejecting yet, so we could lower our entry and get a better entry if it's trying to dig deeper. I'll wait till it gets there, I don't want to speak too soon. Okay, so it's hit the 61.8 without rejecting. What we'll do now is change our entry, because it means we can get a deeper entry from this. So a 20 pip. We'll see if this one's gonna reject yet. Still not had any confirmations to enter just yet, so still waiting. Line up your new size. This is a 15.1. Still no rejection. And that's not good because it's not rejecting off the EMA. So it doesn't really help our idea. This might be using this range as resistance, which isn't what we want to see. So yeah, no trade just yet. Okay, if that one closes like that, then we'll set a limit. So let's see what happens. I'll set it up ready. New order. Pending, buy limit. SL. Entry. SL. And for me, I only need to make like 1% on this to pass this phase 2. So I'm probably just going to take full at like there. And I think that should do it. I'm only entering half risk, aren't I? I'll do a TP1. TP1 should be on that high. So we'll do a TP1 for me. Let's hope we don't have a situation like last time where it fucking, I'm like $80 off. I'm there gambling, trying to make that last percent, that last $20. If you want to say. Right, if this candle closes like this, then we've got an entry. So we'll wait and see. I'm ready on that. Just got to click place. And get the VIP ready. Oh, this is the first trade of the week, so it goes in the free group as well. Okay. Closed. Let's place that. Limit order. Limit order on it, retapping that 71. Let's send this out. This is a 6.61. Alright, Bosch, posted in the free, posted in the VIP. Now we wait to see if it gets tagged in or not. Let's check it out. I am gonna go for a piss real quick. See if I'm richer or poorer by the time my bladder's empty. Are we rich? Not been tagged in yet. My entries are tick off. Let me change that. Update that by 1 tick. Shouldn't make a world of difference. Got a nice reaction instantly after that hammer candle. Spreads. Okay, so a little lesson on how spreads work. Right, let me show you. Settings. If we show the bid and ask price, okay, here's how spread works. So, you see these two lines? The bid price, aka the blue line, is how much you can sell price for. That's always the value the candle's at, and it's the value that you usually see on this hand side there, okay? That's the price that the market you can sell it for. You also have an ask price, which is the price that you can buy the market for, okay? This difference is the spread. If you want to sell something, you can simply just enter the price that you see, because that's the sell price. If you want to buy something, you have to add the spread on, because you want to enter the buy price, not the sell price. So for me, if you watched my entry, GU's got a spread of 4 ticks right now. So when I placed my entry, I added 4 ticks on to what it actually says there. And that's me applying spread. That's because I'm buying into the market. So I want the ask price, not the value of the candle. Then my exits, okay, so once I've entered the buy, if I want to exit, I don't need to apply the spread then because I'm exiting at the sell price. So if it hits my stop loss, I'm selling out of the market and this is the sell price. Same for TPs. So if you're buying into the market, you apply your spread on the entry. And then if it's vice versa, just for simplicity, I'm going to invert the chart. If I'm selling into the market, I can enter at the market price. And I don't need to apply spreads. But then if I want to exit my sell position, I have to buy back into the market. So then you'd apply the spreads on your stop loss and your take profits because you're exiting the market by buying back in. So you using the bid price. So hopefully that clears things up. You only need to apply spread once to your trade, either on the entry or the exit, and that depends if you want to buy into the market or sell into the market. Now I think TradingView may give you the average of those. Let me just check. It's just lagging. No, I think it's just lagging behind the market price there. Yeah, so the current price given is the bid price. Like I said, the sell price is the bid price as it shows there. You've got to watch it because some sources will give you prices like the average between the ask and the bid, which can throw you off. But from the best of my knowledge, TradingView tells you the sell price basically. So everything that I've just told you there before is correct. But do watch out if you're not using TradingView and using something else, because it might not work that same way. Right, we've had a decent support off of that 61.8. Waiting for that pullback to the 71 if we want to catch a trade. Not entirely sure it will, looking at the momentum. We have enough margin to enter off of this as a liquidity retap if we want to do that. So we can change this for a retap of that double bottom and then widen that stop there. That still gives us a 6R. So I'm going to change my limits. 16.6 pips now. So I need 6 lots. Might wait for that to reverse a little bit before I do that, just because it might be a waste of time. It might just push off without us from here. Yeah, brokers make money off the spreads. Yeah, they mark it up, so they'll get it at, depending on their liquidity providers, they'll get it raw, pretty much down the pipe, as close to market price as you can imagine, and then they'll mark it up with a spread, and that's their spread revenue. It's like buying something for £10 and then selling it you for 11. So every time you place a trade, they're making money off of your spread. And then yeah, there's also the A book and B book side. Most retail brokers will be B book to start off with for you. So if you open a live account with a broker, you're trading on a B book. So it's sort of like gambling, where let's say you put a trade on GU long and you make £10. That's the broker actually paying you £10 out of their pocket. They've not actually placed that trade in the market. And then if you lose £10, the broker has essentially made £10 off of your deposit. The reason they can do that is because they have it's sort of like trading in itself. They have the statistical law of averages to say that, like, what, 90% of traders will lose money. So if they actually place your trades just for any old guy that signs up to a live account, they're going to be out of business. So yeah, when you first sign up to your live account, they're not even placing your trades. They're just betting that you'll lose. And if you make money on your account, that's money out of their pocket. And if you lose money, that's money in their pocket. And it's like a casino. There is people that make money and the brokers will pay them out of their own pocket, but there's enough people losing that they can afford to do that. Because you know what else they're going to do? A-book everyone? No, of course not. What they'll do is they'll B-book everyone to start with, and then once they see that you've got some form of strategy and profitability and track record over time, they can C-book you, which is like where they A-book it but not entirely, as like a little bit of a hedge. And then A-book is, yeah, where they just purely like actually place the trades that you're placing. If you're making money, it's actually made them money as well. But most brokers are just B-book, just based on the fact that, yeah, like 80 to 90% of people will just lose money when they're trading. CM, I don't really apply Elliott waves to these time frames. So if I'm intraday trading on like the 1 minute or the 5 minute, like I said, the Elliott wave principles should always be taken as like principles, like theory, basically. On your higher time frames, they're a lot more relevant, but when you're here on like the 1 minute, 5 minute, they're not as relevant. So I don't apply Elliott waves when I'm on the 5 minute or the 1 minute. That's only for my day trades and my swing trades. So, Asian range. This is something that confuses quite a lot of people. Basically, the correct way that's acceptable to take the Asian range is from the overlap of the Tokyo session and the Australian session, or the Sydney session, okay? Because you've got Sydney and you've got Tokyo. So what you're referring to there, Goran, is the Tokyo session. The Asian session is the overlap of Tokyo and Sydney, which is between midnight and 5 a.m. So this is the Asian session that we work from. You can see when that overlap finishes, there's a reverse, okay? And this range here from the overlap of Tokyo and Sydney is a crucial thing to study when we're looking at what's going to happen within the day. So hopefully that clears up the Tokyo session timings. All good, man. Glad I could help. I know it is a tricky one to get your head around that at first, and no one really clearly explains it with the Asian session. But yeah, the Asian session just clarifies the overlap of Sydney and Tokyo, and that's how we refer to the Asian. So yeah, hopefully that one sticks. And then, as Jord mentioned earlier, you've got the Frankfurt session, which is like an hour before London Open as well. But I mainly just go off London Open. Okay, so price has found some resistance. This means that, yeah, let's change our limits. Okay, so new position, 16.2 pips stop, 4 tick spread on GU. I need six lots at my new position, so we cancel that order, place a new order, pending buy limit, 6 lots please. And then new levels, stop, entry. And now if you watch, I'm entering in and I apply my spreads here. So 1, 2, 3, 4, that's my 4 ticks. And then stop loss, yeah, just same price as given in the market because I'm selling out, so there's no spread on the exit. There you go, bosh. We'll update the VIP and the free groups. It's the first one of the week, and we'll let everyone know that our position has changed. TP1, TP2, TP3, paste, paste, and then paste. And that's a what? A 6.07. Bosh. And we add our little photo. Is it on the new prices? Let me just double check. That one definitely is. That one definitely is. Cool, so we wait for that to tap in. Have I edited entry? Yes, Rio. You'll have just seen that get posted in the VIP. But yeah, I've just edited the entry so that it's on that liquidity sweep, and I've put my stop beneath the actual low as well. Could you share more about how price could react around the Asian session? Yeah, I'll do. This is going to be included in the course, mate. It's a little bit too in depth to just share on this live while we're waiting on this entry, but it'll be in the course, 100%. Yes, yes. Still here. Was just on mute. I just went to get a drink. Yeah, sometimes I do that. Sometimes I go on mute, do a bit of work, go away here and there. Nothing's really changed. Just waiting to see if this tags in or if it matches those highs. So, just a waiting game. There's no need to rush. Just waiting on the market to come to us. Don't chase the cat, attract the cat, as I say. So not much development on this GU trade. Still waiting on the same thing for that bottom to get a double tap, pushes higher. EU's pretty stagnant as well. Just kind of waiting on these X dollar pairs to retrace. And that's the mood of the day, really. Huge weekend. So I think everyone's a little bit shocked. Does this work on gold? No, I don't like trading gold. Try it out. Gold to me is just too much fundamental impact. So I guess it would work on gold until some world leader decides to throw the toys out the pram. Fuck up the price chart. To be honest, I'm kind of not even liking this setup anymore with how long it's taken. I do feel like the market should come back and fill this gap in, but it could easily sweep the Asian lows before it does. We've already swept the Asian highs on GU. It might literally come back and sweep this low before it does that. We've lost our EMA as confluence now that we're all the way up here. So to be honest, I might delete this trade. Yeah, I think I'm gonna delete this one, not place it. What I want to see is if this high, if this high can get broken, and then I'll look for another buy higher. But with this not being an instant retest, we've lost this EMA as support, and there's just not enough conviction in it for me now. So let's remove this, and I'll send that out. Let everyone know in the VIP. Cool. Right, now we're neutral, not exposed to any risk, also not exposed to any reward. So we'll just see what happens in the market. But yeah, with this price action now, if price did come all the way down here, we've lost the aspect of this being our support, which is not good, and it kind of opens up the situation of this being an Asian sweep to come back down and take this low, which would obviously stop us out. So next scenario is this EMA keeps playing out, price breaks this high, comes back down, goes higher, and then again same schematic. We'll either take the low from here to there, or you can even take the low from there, and we'll look for a trade there. Much better conviction on that one. Yes, yes. So we've got that triple top. So even if we did look for that entry, it would have been invalidated now because we've met that equal high. So yeah, cancelling it was the right idea. Wouldn't have tapped in anyway. So yeah, now we just wait for this to break higher. If it does, I'm going to be trading for like the next 45 minutes. So still plenty of time for this on the 5 minute. I appreciate you keeping it real with the pairs. So many people say the strategy works on all pairs and markets, lol. Yeah, that is true. I've tested this on. I've tested all my strategies on most pairs, and the way that I look at it is, if your strategy works on the majors, why on earth would you want to trade on the minors? The majors have the lowest amount of spread. They're the most liquid. You're gonna get like slipped out the least amount of times. It's gonna be more profit, less spread, more profit, basically. So yeah, if you do have a strategy that works on the majors, you've got literally 7 options there. I don't trade yen pairs either, so that's 6 options for me. And I don't really like trading dollar CAD just because the spread's usually higher as well. So I've got 5 pairs that I can trade. I don't need more than that. Even if it does work on other pairs, there's fucking 28 pairs that you could trade on. Like, what, you're gonna fucking trade all them every day? Like, I genuinely used to do that, so I'm speaking from experience. I used to watch all 28 pairs and commodities for my trades, and it's just not a sustainable way to trade. Too much work. Everyone falls trap for this maximization of trading, where you get into trading for freedom and then you get obsessed with it and you're constantly stuck on the charts trying to do as much as physically possible, and you kind of forget why you started trading in the first place. You're trading in the first place for freedom. So why are you going to sit there watching all 28 pairs every single day, stressing yourself out, when you can have much more freedom being more selective? And that's the same concept as when people try to rush trading and when they're trying to force trades and find trades. You're just creating more work for yourself. Once you mature in your trading journey and realise that less is more, it becomes more enjoyable as well, because you don't burn out. You're not constantly stressing, checking the charts. You've not got a 24-hour window that you might enter a trade in. Be defined in your trading window. Be defined with what pairs you trade, when you're trading, when you're not trading, and let the markets come to you. You'll make more money and you'll trade less, and that's the beauty of it. Goran says there's basically 2 strategies, you do them right. I've probably got about 10 strategies, to be honest. It didn't start out that way, so I don't want you to get confused and like try learning every strategy that I've got at once, because that's not how I learned it. I learned them one by one, focused on one, executed properly, blah blah blah. Then I've mastered that, and then I learn another strategy, then learn another strategy. Get them coded on PineScript, get them coded on MQL5, EX, get them automated. So a few of my strategies I've got automated right now. So if you're on the autopilot trading, you can see them at work. If you're on the funded autopilot, you can see another one of them at work. And then I've got 3 manual strategies that I trade. I've got other manual strategies as well that I don't really even trade anymore, just because they're not as good as the other ones. got a US 30 system that I've automated. That one's coming out this month. So yeah, all in I've got like 6 to 10 strategies, to be honest. Trade them all at the same time. Obviously having them automated makes life easier, but that is proper trading. That's how hedge funds do it, investment banks do it. You know, they don't just have one strategy. They've got a pot of funds deployed on a basket of strategies. So yeah, that's kind of part of the higher roadmap of trading is like, yeah, take your time, learning, studying, figuring out what's going on and find a strategy that works. And then there will come a point when you actually master that and complete it, and it's just like muscle memory. And then what's next? So I went down the route of, right, let me find another strategy, and now I've got a basket of them that can trade like a fund, like a portfolio, basically. Let's check EU. See if anything's good now. EU hasn't even broke the Asian range just yet. Not really any clear structure on this at all. It's just consolidating. The US 30 strategy, it's a little bit better than Midas, to be honest. But how we'll run it is different from how we run in Midas. So rather than it being free to use and then you take a 30% profit split, with this one we'll just sell the license. So there'll be an upfront price or like a subscription or a choice between the two for the license, and then it's yours to run. You keep 100% of the profits. We can't guarantee that you'll get paid out on prop firms by using it, because there might be other people using the same strategy, and they may not approve of it or stuff like that. But you can try it. It's yours to use. So there'll be a licensing panel where you can remove one account from the license and add it onto another account and stuff like that. So you're free to move it around. Let's say you do get like a 10k FTMO account and run it on there, and then they say, no, sorry, this isn't allowed. You could just take it off that and use it on another account. So it's not like it would have gone to waste. With the current funded autopilot, the reason we're confident of it being used on prop firms is because we're literally orchestrating every set file that people use. Nobody has the same two set files, which means nobody has the same two trades on their account. So it's not a mass market EA, and it's not copy trading. You also own the license, so it runs directly off your account, and you run it on a VPS server so that it runs off the same IP address and stays online 24/7. With the US 30 system, it's a given, it only runs on US 30, number one. And number two, there aren't enough different set files which all generate a profit while having separate trades. So it's not something we can run in that same manner like we do with the current funded autopilot system. So yeah, it'll be more like you pay for the license and then it's yours and you keep all the profits made, whether it's on personal accounts, prop firms, whatever. So yeah, that'll be launching this month. We've got like 4 years track record of that system. I'm just currently setting up the master account so that it'll be on our MyFX book as well, so everyone can see it. Okay, so what we're potentially seeing here is some support from the EMA, which is a really good circumstance because it means this EMA is still valid as support, which does support this entry. I've only got around 20 minutes left of my trading window, so I might just cut it here, to be fair, because I don't think we'll get this whole schematic within the space of the next 20 minutes. Sometimes I do extend that range by 30 minutes, but I think today I'm probably going to cut it short. I'll keep an eye on it just in case we do get it, but I think in terms of a live, I might just be sat here for the next 20 minutes in silence. So everyone in the VIP, if I do get a trade, I'll call it out. So yeah, keep eyes on, but for the purpose of a live, I'm just going to cut it here. This is what we're waiting on. A move to break above that high, retest, use the EMA as support with a fib level, give us some candlestick rejections, and then push higher. And we kind of want to do that before 12:30 the latest, which is half an hour before New York Open, basically. But yeah, thanks everyone for tuning in. Cheers for all the questions, I do appreciate them. I've got a decent scroll wheel there. If you do want to ask anything, just ask it. It allows me to explain an FAQ that a lot of other people will be thinking as well, and then it's nice for me to be able to clip them, use them as short form content to build up social media trading pages with, to educate everyone else as well. So yeah, don't think that I don't want you to ask questions, because it's good for both of us. So yeah, with that being said, I'll see you tomorrow, guys.